I am thrilled to host this special webinar and introduce you to a very special guest presenter, a longtime personal friend of mine, Dr. Ronald Mueller. Ron is an acclaimed, he is the nation's number one authority on small and home business tax law. And he's probably best known as the author of the bestseller, Home Business Tax Savings Made Easy. I love his subtitle, The More You Know, the Less You Owe. And this book is the only plain English guide to small business tax deduction authorized by Congress. Now, as an investigative reporter, Ron spent a full year identifying and researching dozens of small business tax deductions, and after he identified them, he traced every individual deduction all the way back to the official congressional law that authorized it, the tax code section that defined it, the tax court ruling that clarified it, and then came to the best part, at least for you and I. He then spent another 6 months translating it into plain English that average people like you and I can understand and then quickly put to use, saving us thousands of dollars. This is why he's such a popular guest speaker for the last 5 years. I can't believe the numbers of people that register for these calls. Well, that book is called Home Business Tax Savings Made Easy, and it covers the largest, biggest tax deductions Congress has approved specifically for direct sellers and other home-based business owners. And during our time together on this webinar, Ron will brief us on the biggest of those top six deductions. And I want to tell you a little bit about these tax deductions. Ron's business partner surveyed more than 25,000 direct sales professionals and home business owners who actually used the same deduction last year. And guess what? The results are unbelievable. For those 25,000 entrepreneurs, people just like you and I, this one tax deduction alone produced an average of nearly $5,000 in new additional tax refunds. And this deduction put an average of $5,000, we love that, in extra cash in the pocket of 25,000 direct sellers, just because they used the same tax deduction you and I are now about to learn about. Ron, can't wait to hear this briefing. Let's move into it, buddy. Welcome.
Thanks so much, Steve, for a great introduction. I'm excited about doing this webinar for your subscribers, your followers, because it's my passion just to share the information that I've earned in a hard way. This is hard-earned knowledge. But
they love you, man. They love you. I mean, sometimes we can't believe we'll have a guest speaker, and usually hit about 2,000, 2,500 people. But when we have you, we have to kind of moderate, make sure we don't hit our maximum numbers and upset the web or the conference line. So we're always honored to have you, and I know they're excited to hear what you have to offer. Thank you.
Well, thank you, Steve. And I know they're still pouring onto the line, so some people will be joining us in progress, but I don't believe in penalizing people who are on time for those who are running a little bit late. So we're going to jump right into it. But I want to say that Steve, the reason that I do this for you and your group is because as a Christian, I believe in being a good steward of God's money. And I do not believe that overpaying our taxes is being a good steward of God's money. So that's why I do this teaching. I've been teaching this information for probably about 10 years now. What drives me is just wanting people to be able to pay their fair share of taxes. Every penny they owe, but not a penny more. So that's what we're going to be looking at in this webinar. Let me start by just saying that some of you may or may not know that Congress has passed some really big tax deductions, especially for home-based business owners. Well, why would they do that? Because it's good for the economy. Small business is the backbone of the American economy, the lifeblood of the economy, the heartbeat of the economy. It's what drives our economy. Big business got our country into a recession. Small business got our country out of a recession. So that's why Congress wants to encourage people to get into a small business, part-time home-based businesses, because they look back and realize that there was a time when a guy named Bill Gates was in a part-time business operating out of his garage. And so it just makes good sense for Congress to try to incentivize us to get into and stay into a home-based business like direct selling. So, by the way, I want to mention that the special tax breaks that we're going to be talking about in this webinar will benefit your entire family in a big way. Now, even if your income is modest, if your income from direct selling is modest compared to your total family income, this can still have a huge impact on your family's tax savings. This could save a lot of money on your tax bill at the end of the year for the entire family, because your tax breaks in many cases can be much higher than your actual income from your home-based business, because these deductions apply also to all all income for the family, including your spouse's W-2 income, for example. So why I want to answer the question that I always get right up front: is it difficult to qualify for these tax breaks? The answer is no. Here's what it takes to qualify: three things to qualify for the tax breaks, all the tax breaks Congress has passed for home business owners. Number one, work your business on a regular and consistent basis. So if you're having regular parties, you're having regular meetings with prospects and potential fellow representatives on a regular basis, that qualifies you. It's regular and consistent has been defined by the tax courts as at least 45 minutes a day, 4 to 5 days a week. So it's not a big deal. Regular and consistent. Number two is have a profit motive. Be intending to make a profit. Number three, you don't need to. In other words, you don't need to make a profit before you start qualifying for these tax breaks. You qualify as soon as you're trying to begin to make a profit. And number three is keep good records. So that's it. That's how easy it is to qualify. So how many are there? There are a lot of them. Congress has passed in total, I guess, more than 100 tax breaks for home-based business owners. But my analysis after 12, 15 years of studying this full-time and teaching it full-time is there really are 6, as Steve mentioned, the top 6. Today we're going to talk about the top 1 of the top 6. And by the way, when can you learn about them? Well, today we're going to learn about number 1, but a week from today, at the very same time you're on the call right now, I'm going to do an informational briefing that will give you background on the other 5, numbers 2 through 6. But right now we're going to cover the biggest one for most people, and next week we'll cover the next one. Now, don't worry about registration and all that. If you're registered for this webinar, then you're going to get an email later today that will tell you how to register for next week's webinar if you want to learn about the other 5. Today we'll focus on the top 1. So Stephen Covey said, let's begin with the end in mind. Where are we going with this? Here's where we're going. Only taxpayers with a part-time or a full-time home-based business can qualify to deduct every penny of health-related expenses for themselves and even for other members of their family. So because you're in a home-based business, because you're a direct seller, because you have a part-time or a full-time home-based business, you are in a very small category of taxpayers that qualifies to write off every penny of your health-related expenses, and that's what we're going to talk about on this webinar. Now, here's how big those expenses are. These are averages for a family of 4. The average family of 4, according to Kaiser Family Foundation, says is paying insurance premiums in excess of $16,000. Then you've got annual deductibles that range from $1,000 to $2,000, and sometimes even higher. Every time you go to the doctor or the pharmacy, you get a copay. There are pre-existing conditions that aren't covered. Non-covered expenses, also things that are outside, health-related expenses that are outside your insurance plan. And wellness expenses, money you spend to stay well instead of trying to get well. The total, look at that, it's almost $25,000 a year is how much the average person, the average family of 4 is spending on their health care. So let's round off those numbers, because we're going to use those numbers for the rest of this webinar as examples, but let's try to round things off. So let's call them insurance premiums at $16,000, and see down the line, you'll see the rest of the slides. So it comes out to be a total of $24,000. Rounded off is the average amount that a family of 4 is spending on insurance, on health coverage, including their insurance and all those other expenses that we just mentioned. So you may be asking now, but doesn't every taxpayer, don't you already get to write off healthcare expenses? Well, the answer is not even close. Not really. Here's the deal. All self-employeds, people like you and I, self-employeds include people who are working a part-time business, maybe working 5-6 hours a week. So I'm not talking about somebody who's quit their job and they're working only on their own. All self-employeds can get to deduct their insurance premiums, but that's just about all, just the premiums. What about the rest of the stuff? Now, here's how they do that. Every taxpayer files this form. This will look familiar to you. This is the Form 1040, U.S. Individual Income Tax Return. So this return everybody files on April 15th. Well, on page 2 of that form, look on line 29 there if you can read it. It says self-employed health care deduction. Self-employed health care deduction. Guess what? That's to deduct your premiums only. You only can put your premiums on that line. So that's where your $16,000 goes. But remember this slide? We went through all the rest of them. Deductibles, $1,000. Copay is $1,000. Pre-existing conditions, $2,500. Non-covered, $2,500. Wellness, $1,000. So we've got a lot of money that we're spending on healthcare that go beyond premiums. The Form 1040, the basic individual income tax return, lets you write off only the premiums, not the rest of it. So even if we take out the cost of premiums, here's what we get. We determine that you're spending, the average person, average family is spending about $8,000 a year in health expenses that are not, that have nothing to do with premiums after you've paid your health insurance. This is your part. This is the out-of-pocket expenses, the OOP. So $8,000 in tax deductions, that would produce about $2,000 in tax refunds for the average American, because most people are in the 25% tax bracket. So you take your tax deductions of $8,000 times 25%, that's $2,000. So most people, if you could write off that $8,000, that additional $8,000, you'd get another $2,000 in refunds. But guess what? That $8,000 cannot be deducted on your individual income tax return. It's not payment for premium. So the only part you get to write off is the premium part, not the other $8,000. So what happens? Do we get to deduct that $8,000 or do we lose it? Well, the answer is most people cannot deduct that $8,000. I'm going to show you why in just a second. This does not apply to people like you. People who have a home-based business, who have a part-time direct sales business, for example, have a better way around it. But let me show you what the vast majority of people have to go through in order to get any kind of deduction for that $8,000. Most taxpayers, if they don't have a home-based business, deducting the healthcare expenses that are outside of the premiums, there are two big challenges with that. Challenge number one is that you're required to itemize your deductions. That means you cannot take the standard deduction, which is $6,100 for singles and $12,200 for marrieds. Why? Because it's the only tax form that has a place to deduct any healthcare expenses other than premiums. Under your Form 1040, your main individual income tax return that everybody files every year, there's only a place to deduct your premiums. There is no line that says you for deducting anything other than premiums. The only tax form, ordinary tax form, that's available for deducting anything outside of that, any out-of-pocket expenses, is the itemized tax return. It's called a Schedule A. Then there's something else. Even if you do decide to itemize instead of taking the standard deduction, there's something called the 10% threshold to deal with. I call this a 10% penalty. Here's how that works. This is this is Schedule A. This is the schedule for itemized deductions. Okay, look at lines 1 through 4. Actually, I'm going to expand those. Here's what lines 1 through 4 say. Lines 1 through 4, this is the Schedule A now. If you itemize your deductions, that's Schedule A that you fill out. They want to know the cost of your medical and dental expenses, adjusted gross income, multiplied by 2%, blah, blah, blah. We're going to go through an example that shows exactly how this works. Medical and dental expenses. Okay, this is in addition to premium. That's $8,000, right? Using the example that we just started with. Let's stay with that example. You got $8,000 worth of expenses for health that are not part of your premium. Line 2, adjusted household gross income, income for the entire family. Let's say that's $75. That's $75,000. That would include the both spouses working, whatever income goes into the family, whatever income you report on your tax return. Let's say $75,000 for argument's sake. That's like an average of about a little less than $40,000 per person if both are employed. But look at line 3. multiply line 2 by 10%. Multiply $75,000 by 10%. Okay, that's $7,500. Now what are they going to have you do? Subtract line 3 from line 1. That means your total tax deductions are $500. Look at this. This taxpayer's $8,000 worth of out-of-pocket health expenses just got slashed to $500 in tax deductions. $8,000 would have meant a $2,000 refund, but $500 deduction, that's going to produce a refund of a mere $125. Now, do you want $2,000? You want $125? That's a huge difference, isn't it? $2,000 versus $125. The 10% threshold cost this taxpayer $1,875 in lost cash refunds. But guess what? What if we didn't have to deal with that 10% threshold because you have a home-based business? That means that you'd have an extra $1,875 extra cash in your own pocket, right? Because you wouldn't lose that $1,875 if you could deduct all of it instead of losing that the 10% threshold. What if we didn't have to itemize our tax deductions if we didn't want to? What if we could take the standard deduction? We could choose that if we preferred. A lot of people would come out far better. The only reason for some people filing an itemized tax return, the Schedule A, is to get the health benefits. What if we didn't have to file Schedule A in order to get the deduction for health expenses? At the beginning of this web briefing, I explained that Congress has provided some special tax breaks, right, for direct sales and other home-based businesses. These tax breaks, I mentioned, benefit your entire family in a big way, even if your business income is modest compared to the total family income. Now, because and only because you have a direct sales business or another type of home-based business, only because you're in direct sales or home-based business, you can avoid the Schedule A requirement. You can avoid the 10% threshold. Here's how you do that. Here's where we're going with this. Begin with the end in mind. Here's where we're going. You're about to learn how to convert all of your health expenses incurred by your entire family, not just you, not just the self-employed person, but everybody else in your immediate family, into 100% deductible business expenses, not personal expenses. Now, all of a sudden, guess what happens? All $24,000 of your family's health care costs become 100% deductible. No thresholds, no nothing. It's all deductible because you have a home-based business. That's all $16,000 of your insurance premiums. You still claim those on your regular tax return, your individual tax return, 1040. But all $8,000 in other health care costs, now that gets claimed on your business tax return. That's called a Schedule C. So you don't have to itemize. That means an extra $6,000 in extra refunds. That's above and beyond whatever refunds you've been getting. If you're getting a $2,000 refund every year, consider that an $8,000 refund. Using this example, this is a pretty typical example. It's not everybody's not going to be in this category. It may be $4,000 for you. It may be $8,000 for you. But let's say $6,000 in extra refunds for your family for one reason, because you have a direct sales business. So if you ever have this thought that your income is a small portion of your total family's income, and you think maybe this isn't a valuable business to be in, think again, because the tax deductions alone put you in the driver's seat. It makes your family able to save somewhere around $6,000 in taxes. Now, a question might be, how do I do that? How do I reclassify my family's health care costs from, instead of being personal expenses, they become business deductions? How do I do that? Well, by reimbursing health care expenses as an employee benefit. Now, here's how that works. Let me just give you an example. The IRS calls this special tax deduction a health reimbursement arrangement, or we're going to call it an HRA, health reimbursement arrangement. It's kind of convoluted wording, just like the rest of the tax code. Sometimes you hear it referred to by tax professionals as a Section 105 plan. That's because it's Section 105 of the tax code that authorizes this plan. So the federal tax code is broken into sections. Section 105 is one that authorizes the deduction I'm about to describe to you. What is it exactly? It's an employee benefit. You have employee. If you've got a W-2 job or ever had one, you know that your first day on the job they give you an employee benefits manual. It explains things like how much vacation you get and how you accrue it. How much sick leave do you get? What happens if you have any left over at the end of the year? It might offer you a 401k matching plan, something like that. Well, we're going to set up a new employee benefit that's just like those. Step one, the first step, is you either hire your spouse to work for you a few hours a week in your home-based business. It doesn't have to be a lot. It has to be at least probably about, I'd say, 4 hours a week or so in order to qualify. So you hire your spouse to work for you for a few hours a week in your home-based business, or if you don't have a spouse, or you and your spouse are in business together, so you can't hire a partner. So if you and your spouse are partners, you can't do that. Your option, alternative, is you can form a C corporation, not an S corp. It won't work on S corp. You form a C corp, because then the corporation becomes a separate legal entity. It's a separate person. So the C corp, which you own, hires you as its employee. So you still control everything. It's just, it helps to be a little bit schizophrenic to understand this one, because you're really two persons. You're the employer and the employee. Where we're going with this one is if you form a C corporation, that corporation then has to have employees. They can employ one person, that's you. Okay, so let's stick with the hire your spouse example, and you can do the translation if you want to, if you're going to do a C corp instead. But here's how it works. You've got to have an employee, because it's an employee benefit plan, right? So your only options that I can see are either hire your spouse as an employee or incorporate and then have the corporation hire you as an employee. So you hire your spouse to work for you for a few hours a week in your home business. Now that makes you what? An employer, right? It makes your spouse an employee. Well, employers can do what? The employers can give employees a little perk, or lots of perks, called employee benefits. These are things you get in addition to salary by working for a company. Those are employee benefits, like vacation, sick leave. We're going to talk about a different kind of benefit. Then what happens? The employer, that's you if you employ your spouse, gives the employee, the spouse, a tax-free employee benefit. Tax-free is important because you're going to be giving your spouse, as your employee, cash money, and that money will be non-taxable. It will be tax deductible to you as a business and tax-free to your employee, who's your spouse, in terms of income. Here's how it works. Let me just spell it out for you. The HRA Section 105 plan essentially says this. It says, as long as you're my employee, I, as your employer, I'm going to reimburse you because you're my employee. Reimburse you for what? I'm going to reimburse you in what? In tax-free dollars. For what? For all out-of-pocket health care related expenses. That's everything that's not covered under your insurance plan. Anything that you don't get reimbursed for, like your copays, annual deductibles, things that are outside your plan, etc. For who? For you as the employee, but this also includes any member and every member of your immediate family. So you just gave your spouse, who's your employee, an employee benefit that covers the expenses of your spouse, the employee, and your children and yourself. So here's what it means if you put it all together. As long as you're my employee, I will reimburse you in tax-free dollars for all out-of-pocket health-related expenses incurred by you or anyone else in your immediate family. Now, what'd you do? You just converted all of your health-related expenses into a business expense, because one of the things that's deductible for a business owner is wages and benefits. Well, wages is how much you're going to pay your spouse to work for you a few hours a week. Benefits is the value of the benefit you provide to them. Maybe the only benefit you provide is the Section 105 plan, the HRA. Well, that benefit is tax-free. That's how you move all of your expenses off of your individual tax return and put them on your business tax return. So what else covered? A lot of stuff. Your insurance premiums obviously are covered. You can put that on either on Schedule C or on the front of your 1040, whichever you prefer. It doesn't make a difference. But it's deductible, period. But you can also deduct the cost of long-term care insurance. You can deduct your annual deductibles. That's the amount of money you've got to pay at the beginning of every year before your insurance premiums kick in. That's usually at least $1,000, usually and often more than that. Any copays. You go to the doctor, the pharmacy, and you pick up a prescription and you pay whatever the prescription is. Your part is $20, for example. It covers that. Wellness expenses, acupuncture, aromatherapy, massage therapy, all kinds of things that are for wellness are covered under this plan, under your plan. And a wide range of non-covered expenses. Now look at this next slide. I'm going to give you I'm going to pause on this next slide for a few minutes because it's kind of thick, and yet it's only a handful of examples. This is what's covered under your plan, but may not be covered under your insurance plan. Does your insurance plan cover chiropractors? Probably not. It used to not cover chiropractors, then it did, now it doesn't. Why the flip-flop? Because anything your insurance company can cut out of their list of covered expenses is good for them because it saves them money. And they're in business not to make you healthy, but to make money. Vision care. What if you want LASIK surgery? Is that going to be covered? That's considered to be optional surgery, or I forget what they call that. It's surgery is not required. So is that covered? Probably not, but it is under your plan. You can deduct the cost of that. Look over to the right there, orthodontics. Do you have any kids that need braces? You're talking about a $6,000 to $8,000 expense from start to finish for a child that needs orthodontics. That's probably not covered under your health insurance plan. Contact lenses, eyeglasses, blood tests, those kind of things often are not covered under your insurance plan, but they are under yours. So that's why when I say that you've got probably at least $6,000 worth of out-of-pocket healthcare expenses, this is why, and this is just a sampling of the things that are authorized by Section 105 of the tax code as being deductible under your HRA plan. Well, how much is it worth? Well, look at this. We just talked about this. For 1 year, we're talking $16,000 in premiums, $8,000 in other costs. That's $24,000 in estimated healthcare costs. Under Section 105 plan, that means $24,000 in new deductions. That's way different than what other taxpayers get. You get some special, huge special breaks because you have a home-based business in direct sales or some other type of home-based business. That adds thousands of dollars to your tax refunds. Whatever you've been getting in tax refunds, you ain't seen nothing yet. Wait till you see how much bigger it's going to be once you understand how to use and begin using this HRA plan I'm describing to you. So if you think I'm exaggerating, here's some proof. Steve mentioned this when he introduced me. We surveyed 25,000 small business owners who did set up a Section 105 plan, an HRA, last year. And they found the survey showed that plan alone slashed their taxes an average of $4,972 last year. Just a few dollars shy of $5,000. Slashed their taxes by $5,000 just about. Well, where do you think that money went? If it slashed their taxes by $5,000, where'd it go? Went into their refund. So that means their refund, this is 25,000 people. We're not talking about a couple of, sampling of a couple of people here. 25,000 people, the average was a refund of just shy of $5,000, additional refund. So as you now know, it was worth nearly $5,000 extra cash. That was extra cash in the pockets of 25. These are real taxpayers. We really surveyed people who used an HRA plan last year. So I bring this out because it's I want you to know that I'm not exaggerating. Some of you say, oh, I'm not possibly spending $24,000 in health care. Really? Okay, we'll see. Here's a warning though, about the HRA. It's a bit tricky to set one up correctly. You've got to set it up correctly in order to get the tax benefits from it. It's even more tricky to administer the plan correctly. Now, I'm not saying don't do it. I'm going to show you an easy way to do it, but it is tricky. Just know that it's a little bit complex to set it up right and then to administer correctly. By administer, I mean you need to, once you set the plan up, once you put it in writing, that little plan that says I'm going to reimburse you for all expenses, etc. Once you set that up, you've got to follow. You got to do it correctly. There's certain ways the IRS wants you to do it, and so that can be a little bit tricky. Just to set up the employment, just to employ your spouse or employ yourself as from your C corporation, there's this long list of things you have to do just for the employment to be legal or IRS compliant. Then you got this whole list of things you have to do once you implement the plan. This is plan implementation, all the stuff, all the steps you've got to take to implement the plan. Well, here's what's critical: record keeping. I call this the center pole of the tent. If you've ever gone camping, you know the center pole of the tent will hold the tent up. The center pole drops, the whole tent drops. Well, record keeping is critical to the HRA, actually to every tax deduction, because the law requires taxpayers to keep IRS compliant records, good records that give proper documentation for every tax deduction you claim in your tax return, not just any tax deduction. No records, no deduction. So the law requires records to back up every tax deduction that you claim on your return. Number two, IRS auditors, they love to disqualify as many deductions as they can. Why? Because that helps them rake in revenue. What's the easiest way to disallow a deduction? To claim that records are inadequate or incomplete. So if your records aren't right, if they aren't exactly what the IRS expects, they can disallow the entire deduction. And let there be no doubt in your mind, HRA does have a lot of record-keeping requirements. But I solved that problem for you too. Here's what we're going to do. I found someone to do the detailed record-keeping for you. In fact, they're doing the record-keeping for me. I have an HRA plan, and this is how what I'm about. The rest of these slides, I'm going to talk to you about what I'm doing, because it's the same thing you can do. I found somebody else to keep the records for me, and by the way, this is the same company. These are the people who administer my own health reimbursement plan, but they also are the ones who administer the plans for the other 25,000 people we surveyed. That's where we got those taxpayers. It's a rock solid company. They currently manage HRA plans for more than 25,000 direct sales reps and other small businesses across the country. Their name is TASK, Total Administrative Services Corporation, TASK. I kind of like the acronym TASK because I've always considered record keeping to be a task. Now, I personally put them to the test. Long before this webinar, I became a member of TASK. I had them start working to set up my HRA plan and to administer it. And I test drove it long before I ever thought about bringing it to see Wiltshire's friends, because I don't want to bring anything to friends of my friends until I know it's going to work. But I test drove this thing, and this sucker works. But here's a list of the primary things. There are 7 primary things that TASK does to make it easy for me to safely get all the tax breaks. And by safely, I mean, easy is self-defined. I don't have to do much work. Safely means that I don't have to worry about is it right, is it complete, is it IRS compliant, will I have a problem with an audit? So they make it easy for me to safely get all the advantages of an HRA plan, but without any of the headaches of administration of it. I don't have to do the record keeping or paperwork. So TASK does 7 major things, a lot of things, but 7 major ones. First thing they did for me, and they will do for you if you want them to, is they provide a written, customized HRA employee benefit plan. This is a legal document. This is a plan that they guarantee is compliant with all federal and state laws, all federal laws, and within whatever state you're in. They work in all 50, so they'll make sure it's compliant with your state laws as well. Now, you could get this from a typical law firm, because this is a legal document, so it's not something you want to write up on your own. Typical law firms, I've found, charge somewhere between $1,500 and $2,000 to produce this same document. But TASK includes it at no additional cost. So you do not have a $1,500, $2,000 upfront cost just to get a piece of paper written in legalese. Second thing they do is they handle all the details of administering it for you. They ensure that every I is dotted and every T is crossed, every report, record, every other documentation that IRS wants, they make sure it's done right, and submitted when and where it needs to be submitted to. So they handle the details. So I don't have to take my focus off teaching tax savings in order to understand, do the administration of my HRA plan. I just get the benefits of the HRA plan by letting somebody else do that administration for me. Number 3, laws change. Laws and rules change continually. Congress cannot stop tinkering with the tax code. Every time you turn around, they're doing something to simplify the taxes, right? It doesn't ever simplify. They say simplify, get worried. It doesn't. It makes it more complicated. But one of the things that I count on because I use TASK is they stay on top of these changes. They've got lobbyists and researchers that stay on top of changes in the tax law, and anything that has anything to do with an HRA. First, they'll keep you informed about what the new change is, what just happened. But then they automatically go in and adjust your HRA plan however it's needed to make sure your plan's always in compliance. you never have to worry about, let's say you go into an audit and some auditor looks at your plan and say, oh, we changed that 2 years ago. Oh, you didn't know that? Okay, disallow your deduction. That ain't going to happen. You use task and you're going to, they keep me compliant. One of the things I love about Task is it's so unusual. They provide actual live on-call assistance and live Q&A on an unlimited basis. I can call as often as I want to, and I don't get a recording. I don't have to go online and submit a work report to get somebody to respond to a question. I dial a phone number and a real person answers, and they give me whatever assistance I need and answer whatever questions I've got. That's on a year-round basis, unlimited. You ask any questions you want, and they don't charge you anything for that. You don't, when you call, not like your lawyer when you call and they start the clock running and they send you a bill for the time you spend on the phone. No, that's all included. I love that. I love the fact that I've got that freedom. I never have to wonder about a question relating to my HRA. I just make a quick phone call, got the answer, done. Number 5, at the end of the year, Task performs a detailed year-end review. That's like a questionnaire. It's a survey. It's a conversation that they do to make sure that I have all the documentation I need for claiming my health deductions and claiming the maximum amount of deductions I'm entitled to. So they'll make sure I haven't forgotten anything. Make sure that if I've forgotten an expense, we include it. If I don't have a document, they'll reconstruct it or they'll get it for me. So they make sure that at the end of the year that I'm buttoned up and ready to file my taxes and get maximum deductions from my HRA. The last 2 things I think are huge. This one, number 6, is an audit protection guarantee. If you ever get audited, what they're promised to you is if you ever get audited and your HR plan is ever called into question, Task will assign a tax lawyer to handle it for you at 0 cost to you. If they bring up the HRA, you can say, oh, time out. I've got somebody represent me on this, so I won't be answering any questions on my HRA. You call Task, they assign a tax lawyer at no cost to you, and they'll represent you in that audit. And if you don't like the results of the audit and you go to appeals and all the way up through tax court, they'll cover the costs. They'll cover any cost necessary to protect your HRA deductions. And guess what? They've never lost a case. So far, they've never lost a case. So what that says to me is they know how to do this stuff and do it right. So that's worth a lot to me because it lets me focus on my real business, which is doing webinars like this one for Steve Wiltshire. Number 7, this one is a slam dunker. This is one that says I got to do this. Task guarantees. Remember the tax deductions I said will probably be somewhere around $15,000 to $20,000. Task guarantees that your tax deductions that they can document from the HRA will be at least $2,000 for a tax year. And if it's not, they'll refund your entire membership fee. $2,000 in tax deductions for most people produces a $5,000 tax refund. So essentially what they're doing indirectly, what they're saying is, I guarantee that you're going to get your refund will increase by at least $500, or we'll give you back your entire year's membership fee. That's what gave me the confidence. Those 7 things gave me the confidence to claim all my Section 105 deductions. I didn't have to worry about being audit ready, having the right record for an audit. I knew I had certainty. 3 things. My records are being kept by professionals. My records are being kept accurately. If they weren't being kept accurately, they wouldn't offer that audit guarantee. I've got 0 risk of losing that deduction even if I am audited, even for a random audit, something selected by computer, because they're going to have a tax pro, a tax lawyer come in and represent me. So that gave me the confidence to go forward with this plan that I knew was going to put a minimum of $500 in my pocket, because that's their guarantee, and more likely it's going to be close to $5,000. So with a properly set up plan, a properly administered plan, a properly documented plan, this is how you can write off all health-related costs, not just for you, but for every member of your family. That's why I said this is huge for your family. No matter how big or little your income is compared to the total family income, this is huge. This is going to add $5,000 to the tax refund of your family. If you're not sure if you qualify, I've gone over this kind of quickly. So if you're not sure if you qualify for this, I want to give you a phone number. Write this number down, please. There's HRA plan experts available at Task right now, and they know we're having this webinar, so they've got extra people standing by. These are people who are experts in HRA plans. They'll chat with you about your specific situation and answer your question. You can call them and say, let me explain my circumstance. I'm not sure whether I qualify because here's what's going on with me. And by the way, don't worry, these people are not going to try to sell you anything. These are information experts, not sales reps. They're not going to try to sell you anything. Their job is to answer your questions to see whether or not you qualify. You see, they don't want non-qualified people as members. If you're not qualified and you become a member, then they got to give your money back because they won't be able to produce $2,000 in tax deductions for you. Or if you crosswise to the IRS because something was done wrong, they can't represent you properly in the tax audit or tax court. So they want to make sure that this is right for you. They want to make sure the fit is right. So to make sure the fit is right, just call 855-591-0562, and somebody at Task will answer that phone call, and they're all experts on the HRA plan. Now, how much do you think I'm paying for all this? Listen to what they're doing for me. They're completely setting up my plan for me. They're keeping IRS compliant records. They're handling all the administration of the plan, all the details that I don't want to deal with. They give me a detailed year-end report. They guarantee the accuracy of that report. They even handle payroll in some states. Some they don't because states make some things complicated. But in most states, they can even handle payroll if you're hiring your spouse and show you how much to withhold for taxes and stuff like that. They'll handle the expense reimbursements to the spouse. So when your employee submits a claim to get reimbursed for a health expense, they'll handle that for you. They track the changes in the tax law. They guarantee that minimum of $2 grand in deductions. 100% audit guarantee, live on-call Q&A. Now remember, their average cash refund for the 5,000 or 25,000 people that they worked with last year was just shy of $5,000. What do you think I'm paying for all that? $395. $395 gives me everything, and that's tax deductible. That's because of economies of scale. See, if they had to provide all these services for one person, they'd have to charge probably $23,095. It'd be huge. But they're doing it for a lot of people, and that gives them economies of scale, which means they don't need to charge you nearly as much. So for $395, I get everything. Now, if you're cash strapped, I've got that covered too. Because some people they say, okay, I get the value. I can't lose in this deal. But because they're going to give me a minimum of $500 refund, or else I'm going to get my money back. But I don't have the $395 right now. Well, Task does not provide. Task is a third-party vendor. I don't represent Task. I'm not a part of them. I've got no stock or interest in their company. I simply recommend them to you because I've used them and they work. And I want to make you aware of the same thing. So if you're cash strapped, here's what I'll do. On the web page, hugetaxdeduction.com, I'll give you two payment options, 0 interest. Simply break that $395 into 2 pieces. Pay half of it right now. I will pay your other half for you so that you can get started with Task. Task won't start working for you until they got $395. So you pay half of it, I'll pay the other half for you. You can pay me back 30 days later. So if you're interested, that option is available. I do want to ask you though as a favor to not use that 2 payment option unless you have to. If you have the $395, please do that because this negatively affects my cash flow if a lot of people take advantage of this offer. And I don't charge you any interest at all on it. So I make 0. I actually lose money when I do a 2-part payment plan. So use it if you need it. Don't use it if you don't need it, but if you do, absolutely use it. Now, what's $395? It's 8% of the $5,000 plus that you can expect to get back in extra tax refunds. That's the $497 that 25,000 people got back on average. 8%. So they're asking you to give them 8% of what you're probably going to be getting back. It's also, though, that's a probably, but here's the guarantee. It's $100 less than the minimum guarantee that you'll collect in extra tax refunds. They guarantee you $2,000 in tax refunds, or your $395 comes back to you. $2,000 in tax deductions is going to generate about $500 in tax refunds. So the worst that could happen, what's the worst thing that could happen? You make $100 profit. You give them $395. This is per tax year. You pay them $395. If you don't get back at least another $400, at least another $100 beyond that, that's a 25% profit. if you don't get back another $100 profit, that's the bare minimum. You get your money back. You can't lose in this deal. What would you do if you walked into a bank and they said, hey, can you give me 400 bucks? I'll give you back 500. And if I can't do it by the end of the year, I'll give you back your 400. I mean, that's a slam dunk deal. That's a no-brainer. So I guess you can't afford not to do this. So here's the question. Do you want a $125 tax refund or a $2,000 extra money in your tax refund? No, seriously, is there really a decision to make here? I don't think so. I think it's a no-brainer. It's only a matter of how you do it. Now, I want to recommend that you really want to do it today. You don't want to wait for another day. Here's why. Why the urgency? A health reimbursement plan, by law, it takes effect on the first day of the month in which you establish it. The first day of the month in which you establish it. This is August, right? Guess what? August ends in 2 days. So if you join task for $395 the next 2 days, you'll get the benefit of all of the August expenses for health reimbursement. Now, a $5,000 annual refund, that works out to be about $400 a month. Don't lose another month. If you wait for 3 days before you call task to get started, you're going to lose the average of $400 for this month. And it costs you less to get started now than the loss of waiting. So here's where you can enroll. Enroll now at hugetaxdeduction.com. If you have questions, here's the number again to call an expert at task. But I want to do one more thing. Those of you who know me know that I like doing decision maker bonuses. What this means is a decision maker is somebody who's sitting there, you're on this webinar, you've already decided, of course I'm going to do this. It makes infinite sense. There's no reason not to. The worst that can happen is I make a $100 profit. That's not a bad thing, right? So some of you have already decided to do that. Decision makers, people who can size things up and make a decision quickly, they're the ones who become the most successful in business. So I like rewarding those people. So the reward that I will give you if you order in the next 20 minutes is a private phone consultation with me on any home business tax topic you want. It's a $100 value. It has nothing to do with task. You can talk about any home business tax related question you want anytime for the next year. So you can bank this and use it later if you want to. Now, let me quickly point out that this is not to try to get anyone to make a decision quickly. If you're not sure and you say, oh, I want that extra time with Ron, I want that private consult, so I better make this decision. No, this is not here for the purpose of convincing you to do something you're not sure you want to do. Wait until you're sure you want to do this before you do it. If you think this doesn't apply to you, please do call that 855 number, because that will either confirm that this is not right for you, or it'll let you know something you may not know that would say, yeah, I should do this. But you got nothing to lose by calling that number. But if you've already made your decision, then I'd suggest you go to hugetaxdeduction.com right now and enroll, because if you enroll today, you'll be able to get your plan dated August 1st, 2013, and you'll be able to take advantage of all the tax deductions for all the health-related expenses for this month and going forward. So I want to thank you so much for joining me. Steve, I'm going to turn it back over to you to close out. I love doing these webinars because I pray before each one that I'm clear and succinct in what I say, because I don't want to ever sell anything to anybody. I want to give you an opportunity to save some money, huge money, for those who get it, those who can follow and say, yeah, it makes sense to me. So you can either keep overpaying your taxes by about $5,000 a year, or you can keep it in your pocket by having somebody help you with it, with a membership and a small membership fee that is fully refundable. So Steve, back to you.
Thank you, Ron. Wow, just listening to you, it reinforces how overwhelmed we all are. There's so much information coming at us, going right back to what Darren Hardy says. And when we really look at the word leveraged, what is leverage? How do we leverage and be leveraged? It's about finding experts. Like just in listening to you, I knew I could kind of zone out. After I figured out, and of course I knew this before the call, that all I have to do is A, make the decision and take advantage of the write-off, or B, pick up the phone and call the number and ask a few questions. And I think that too often people are wearing way too many hats. And I was just had the greatest experience with my son, realizing that he's just doing incredibly well in cross country and basketball. And there was a time, I'm a runner, but I'm definitely not a basketball player. And there was a time in my life where, I experienced his disappointment in making the B team. And he's like, oh, he's 9 years old. All my friends are on the A team. He's now 15, and he's like, I'm so disappointed about that. And I said, Quinn, you know what? Sometimes it's a gift. The key to life, the key to success is that it's all about finding the right people, finding the right activities, finding the right resources. And so I, had a big conversation with him, and it just ended up with him finding a mentor. It ended up with him going to basketball camps. It ended up with me enrolling him in the gym at 12 years old, and having him just get involved with the young adults and teenagers. They play basketball. They've got all these little games going on. And same with cross country. And then to realize this year that he's like varsity cross country. He's probably going to be varsity on basketball. And we can look at life so simple through, I love the youth. I'm all about youth. I'm all about teenagers and how to support them in making their dreams come true. And just even in listening to you, always give us exactly where we need to go on a subject we really don't want to hear about, that we know is valuable and a smart business decision. You always rock and roll. Anyway, great call. My long version of amazing call, as always.
Thanks,
Any
Steve.
last minute things you want to?
That's actually the reason why I work with an outside vendor to manage my HRA plan, because I don't want to deal with it. Could I do it? Yeah. But it's time consuming and it's detailed, and I don't want to do that. I want to focus on my primary business, and if I can find somebody else to do it in a way that doesn't end up costing me anything out of pocket, that's a no-brainer for me.
Yeah, no doubt. There's an old saying that, what is it? Do half the things in life better bring you passion. Do the things in your life that bring you passion. The other half bring passion to them. I like to say, the other half that don't bring you passion, delegate it, hire it out, find somebody else to do it. And if you can, that's really, really the best choice. But, well, thank you so much for your time, your energy, your passion, always giving God credit for your work. I admire that about you. You're always, just in my relationship with Ron, all of you that are listening, if I am ever kind of going through a challenge, first thing he'll say to me is, have you consulted with God? That's always his first reply. So I appreciate you, and I know your work in the world is very meaningful, and you're making a huge impact, my friend. Thank you for joining us.
Thank you, Steve. Thanks all of you for joining us, and we have one more webinar on the same topic tonight at 5:30 Pacific time. So I hope that some of you will send some other people to that webinar and get the same briefing. Thanks so much.
Beautiful.
Have a great day.
Take care. Love and success, everybody.